You ever see a stock price just take off and you're left wondering, is this for real? Well, today we're going to look at a tool that helps you do just that. It separates the real deals from the fakes by checking the power source behind a price move. Let's dive in.
Yeah, this is the classic trader's dilemma, right? You see a chart that's just shot straight up, and that temptation to jump on it's huge. But you gotta ask yourself, does this thing have real momentum, or is it just about to run out of gas and completely fall flat? That is the exact question we're gonna tackle.
Okay, let's think about it like this. Picture a race car. The price, that's just how fast it's going. But the trading volume, now that's the fuel in the tank. See, a car can look super impressive speeding down a hill with an empty tank, but you know that momentum isn't going to last. We need a way to check that fuel gauge before we place any bets on the race.
And that right there is where the Volume Price Trend Indicator, or VPT for short, comes into play. This is our fuel gauge. It's this incredibly powerful tool that lets us know if there's real power, real money and conviction behind a price move. It basically gives us a peek right under the hood.
So what exactly is under the hood of the VPT? Well, it's what we call a cumulative indicator. That just means it's constantly building on itself, day after day. It's tracking the flow of money, and it gives us this running tally of who's really in control, the buyers or the sellers. It's kind of like having an insider's view of the market's move. Now, this is where the VPT really shines. You might have heard of a similar tool called the on-balance volume, or OBV, but think of OBV like a simple on-off light switch. It's either up or down. The VPT, though, it's more like a dimmer switch. It doesn't just care if the price moved, it cares how much it moved. Because it factors in the percentage change, we get a much more detailed, a much more nuanced picture of the real buying and selling pressure. Okay, so we know what it is, but how do we actually use this thing? Well, there are two key signals that traders look for to really get an edge. Let's break them down. All right, first up, we've got the most straightforward signal, trend confirmation. And honestly, it's super simple. If the price is climbing and the VPT line is climbing right along with it, boom, that confirms the trend has plenty of fuel in the tank. It means there's real buying pressure behind that move. And of course, the opposite is true. If both the price and the VPT are falling together, that validates the downtrend. When the two are in sync, that's exactly what you want to see. But here's the thing. The real power of the VPT is its ability to act like an early warning system. Seriously. It can spot trouble brewing long before it's obvious just by looking at the price. This critical signal is called divergence, and believe me, it can be an absolute game changer.
So what is divergence? It's when the price and the indicator start telling two completely different stories. It's like you're in that race car. Your speedometer is still climbing, but then you glance down and you see the fuel gauge dropping toward empty. That is a massive red flag that the trend you're in might be about to reverse course.
Let's look at the classic warning sign, bearish divergence. So the stock price pushes up, it makes a brand new high. On the surface, everything looks fantastic, right? But then you look at the VPT, and it doesn't make a new high. In fact, it's actually lower than its last peak. What does that tell you? It tells you that even though the price is higher, the buying power behind it is weaker. The trend is totally running on fumes.
And of course, this works the other way too. With bullish divergence, the price hits a new, really discouraging low. It looks bad. But the VPT, it actually makes a higher low. This is a super subtle but really powerful clue that the selling pressure is just drying up. The sellers are losing their nerve, and that can be the very first sign that a downtrend is getting exhausted and a recovery might be just around the corner.
Okay, so we can read the signals. Great. But how do we turn that into an actual trading strategy? Let's walk through a really popular approach, but hang on, because right after, I've got a crucial warning that you absolutely need to hear. So a really simple but effective strategy is called the signal line crossover. Here's how it works. First, you add the VRPT to your chart. Easy enough. Second, you smooth it out by applying a moving average to it. Just think of this as an average of the VRPT's recent values. That moving average line, that becomes your signal line. Now, when the main VRPT line crosses above that signal line, that could be a potential buy signal. And when it dips below it, that flags a potential sell. And now for that warning. This is probably the most important rule of all. Never, and I mean ever, use the VPT by itself. It's a brilliant confirmation tool for sure, but it is not a crystal ball. Relying on it alone to make your trading decisions is an absolute recipe for disaster. Really, the best way to think of the VPT is as your co-pilot, not the pilot. It's sitting right next to you, providing crucial information and context. It's confirming what you think you see or warning you about something you might have missed. But at the end of the day, you are still the one flying the plane. It's just one piece of the puzzle, not the whole picture.
So let's just sum it up. The VPT is fantastic for confirming trends, and those divergence signals can be incredibly powerful early warnings. But it's not perfect. It's what's called a lagging indicator, meaning it's based on past data, so it can be a little slow to react sometimes. And in those really messy, choppy markets where prices are just going sideways, it can definitely give you some false signals. And that's exactly why it has to be just one tool in a complete toolkit. So the big takeaway here is this. The next time you see a stock that's on the move, don't just stare at the price. Look under the hood with the VPT. Remember, it's not there to predict the future. It's there to give you a much clearer reading on the present. And that clarity, that can be the difference between just guessing and actually knowing.
So that really just leaves us with one question to think about. From now on, when you look at a chart, are you just going to be watching the price, or are you going to be watching the power that's actually driving it? That's the kind of clarity the VPT can bring to the table.